Hello and welcome dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And today is May 15 and we're starting from euro dollar pair with Sebastian Siliger. The euro dollar pair has fallen out from the falling wedge pattern on the H4 timeframe and hit the local lows at the level of 1.0846. The local bounce from the lows is shallow and bulls want to test the intraday technical resistance located at 1.0910, which is the key short-term technical resistance as well. The momentum is weak and negative again on the H4 timeframe chart, so the bears have the control of the market. But the market conditions are extremely oversold. These noticed that the breakout continuation of the downside from the falling wedge pattern should be aggressive and dynamic, with the targets seen at 1.0832 and 1.0789. We've got a trading plan for the next major, GBP USD. This trading plan is presented by Petar Yakimowicz. GBP USD has been trading upside this morning, and Petar found rejection of this support level at 1.2450, which is good sign for the further rise. Due to the strong upside cycle on the GBP USD and the rejection of the support at 1.2450, Petar sees potential for the further growth towards upside references. Upside objectives are set at the price of 1.2530 and 1.2610. Stochastic oscillator is showing fresh bull cross and bullish divergence in the background, which is another sign for the further upside movement. Key support is set at the price of 1.2450. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 2017, below the 200 EMA, located at 2019. And within the downward channel formed since May 9. We can see a strong resistance around 2020. If gold breaks this area and consolidates above, we can expect it to continue to rise. The instrument can reach the top of the symmetrical triangle pattern around 2027. On the H1 chart, we can see a symmetrical triangle pattern. A sharp break and daily close above this level could favor bullish momentum and could push the price to 2062. Plus 1.8 Murray level, or could enable a break below to the 1937 level. If gold managed to break above 2027, top of the bearish channel, and stabilizes above, it could gain bullish momentum and move towards 2061. and 2077. Conversely, if gold falls below 200 USD, psychological level, and 88 mirror level, and with the daily close below these level, it's likely that the price of gold will face the next support at 1937, 78 mirror level. In the next few hours, gold is expected to consolidate above 2021. If this scenario happens, we can opt to buy this instrument with the targets at 2028 and 2062. In case gold falls below 2020, 200 EMA, is expected to reach the area of 2004, which coincides with the bottom of the symmetrical triangle, and this could be seen as an opportunity to buy with targets at 2025. The Eagle indicator reached the oversold zone. Therefore, with any pullback, and as long as it trades above the psychological level of 2000 USD, it will be seen as a signal to continue to buy. What about cross-currency pairs? For example, GBP-JPY. Arif Makmur presents. On the 4-hour intraday chart of GBP-JPY cross-currency pairs, a falling wedge pattern can be seen, and the support level of 138.04 is strong enough to prevent the GBP-JPY downward correction, especially with the confirmation by the MACD indicator, which is in a speculative buy position. So there is a high probability for GBP-JPY in the near future that Japanese yen will appreciate rally up to the level of 171.14 as the first target, and the level of 172.30 as the second target. As long as it's on its way to these targets, there will be no significant downward correction, especially if it breaks below the 166.46 level, because if this level is broken down, a bull scenario that have been previously described will become invalid and cancel themselves. And once again, here it is, Arif Makmur with medium-term trading idea for NZD-USD currency pair. If we look at the 4-hour chart of NZD-USD currency pairs, there's a few interesting things. The first one is the appearance of the double top pattern. The second one, price movement below its moving average. And the third one, OSMA indicator, is in a negative territory. Based on these three things above, then seems like Kiwi on the nearest future has the potential to go downward to the level of 0.6129 as the main target, and the level area of 0.6062 or 0.5989 as the second target. Even so, the KV still has the opportunity to be corrected upwards as well, but during its journey towards these targets, if there is an upward correction and does not exceed the level of 0.6341, then the kiwi still has the potential to fall down. And finally, here's Laurie Bailey with USD GPY pair forecast. Here we go. Last Friday, the USD GPY pair bounced off the support of the embedded price channel line 134.55 and broke through above the resistance of 135.40. Now the 138.50 target is available. This is our main scenario. If the price returns below the 134.55 level, it will continue to fall to the MACD line around 133.45 mark. On Friday, the yield on 5-year US government bonds rose from 3.35% to 3.45%. The dollar received support in the fight against the yen. On the 4-hour chart, the price is above 135.40, which is now support for the probable correction, as the signal line of the modern oscillator has turned slightly downwards. Overall, the price has also settled above the balance and the MACD line and established itself in a short-term uptrend. That's all for today. See you online soon. Good luck.